The bigger they are, the harder they fall. The faster it goes up, the faster it goes down. Well, normally those phrases are bad things when it comes to crypto and finance. But what if I told you things that go up quickly, go down quickly is actually really good for XRP and XLM? And you're sitting there going, Klaus, why do you sound so excited? Because Bitcoin is making another run at it, and we know the alts follow the Bitcoin moves. Oh, and the data is moving in our direction. Wait until you see what I got to share you. You might be shocked with what's coming up in the near future. Troy BR says, I'm selling silver to buy H-bar. We're all making plays. Captain Cornchip says, when Klaus is positive, I know my Lambo is closer than ever to getting out of the repo. What about the Mini Cooper S or the 99 Ford Escort? Bitcoin sitting at 35,707 ETH, 1901. XRP making another move, 69.2, going to try to hit that 70-cent mark, while XLM making another move to 13 cents. When the Fed gets ready to start cutting rates, it won't be small. Michael Craig, asset manager, head of asset allocation, predicted Wednesday that the Federal Reserve will be aggressive when it starts cutting rates, although the timing of that shift remains uncertain. When they do start cutting, it won't be small, it'll be strong. Craig added that when rates start to come down, I wouldn't be surprised to see 200 to 300 basis points of cuts. Whoa, now let's digest this because this is great news for crypto, and I'm going to show you what he's talking about. Got the Fed fund rate up on the screen, and you could see right here, right in the middle of 22, 1, 2, 3 big moves right there. That was 3 75 basis point hits, one after another, which rocked the market. That really reset things, okay? So what he's saying is look, the Fed had to aggressively pump up rates in order to squash the inflation. Now that inflation is going down, the Fed, if they keep rates too aggressive for too long, it crushes the economy and makes things even worse. So what he's saying is look, we're going to get to this tipping point where the Fed is going to go, remember that aggressive rate hike action we did to make things right? Well, if we leave rates too high for too long, we can make it worse. We need to aggressively come down. Could you imagine the market movement if Jerome Powell and the Fed start coming with back-to-back 50 basis point reliefs? Whoa. Now, we're still trying to see when the pause is. And when the pause is, I'm talking about the long pause because we're in a pause right now. Meeting coming up on the 13th. I'm going to share that data with you. I've got more juicy data. Don't worry. We're not done just yet. Got more juicy data. But I want you to think about this pause. And that's what we're all looking for right now is the timing of this. We're waiting to see, hey, look, when we level off here, how long are we going to level off till we start thinking, yep, we're coming on down? Because when we think we're coming down, we think we're going to come on down just as fast. That's the juicy news. Now, how are traders looking at this and how are you able to use this information to help you? Well, let's start looking at some contracts and some stuff coming up, okay? 90% chance that the Fed is going to pause at the meeting coming up here in about a month. 90% chance. 10% that they're going to raise it. Okay. Now, remember, markets are forward looking, all right? So now let's go to the January contract. All right, January contract shows, well, wait a minute, a little bit more of a chance for Jerome Powell and the Fed to raise rates. Now, you're sitting here going, well, Klaus, that's United States. Yes, remember, banks across the globe take cues from the Fed. There are a whole bunch of countries out there that their currencies, along with their central banking standards, mimic and mirror the Fed identically. Yeah, they peg it to the Fed. So when the Fed does their action, there's a bunch of countries out there like, oh, doing the same thing. That's why I use this as a good indicator. Here's the January contract, okay? And this is the end of January. You've now got 16% of people out there saying, look, we got one more rate hike then. So I want you to think of that whole curve I was showing you before, okay? This thing right here. Imagine one little baby rate hike. Does that mean then we're going to be reaching that top and then we're going to start coming on down? Watch what happens when we go to the next contract. The next contract now happens in March of 24. Look at that. That is where the market is saying, look, this is the pivotal point. 68% are saying, you know what? We're going to be at the same rate we are now until the March contract. Oh, okay, that's where we talked about the pause, right? How long will this pause last? Because if the pause is out there for a long time, that's still painful, right? That's still high rates for a long time. We're just not going up anymore. Painful. Longer there's pain, what does the Fed have to do to fix it once they see that it's working the way they want? They have to come down aggressively. So look at that. In the March contract, we're looking at 18% chance that the Fed is now going to start going back with rates. Take this now one step further to the May contract and watch what happens. May contract now has a 40% chance that that's it. We are done with this garbage. And remember, the markets are forward looking. So this data may be 40% now, but as we get closer, you know it's going to grow and grow and grow as the conditions ripen to what we're looking for. Interesting stuff, isn't it? So now if we go just a little further, okay, and then we're not going to go any further after that. That's enough further. Look at this. We're basically sitting here going, okay, the market is now divided on whether we're going to be at a quarter less than where we're at on the way down with a stronger move going to 450. Whoa, that'd be 3/4 basis points. That's a shitload. With very few players saying that, hey, you know what? In June contract, we're not going to get hit bad. So I'm looking at these articles, and I'm with Michael Craig on this one. When he says when they do start cutting, it won't be small. It'll be strong. Yes, because they had to raise rates so frequently and just so continuously. They've taken a couple pauses, which has been good relief. High rates for a long time do a lot of pain. But once that pain and once that damage has got us to levels that the Fed is, happy with, that's when the rate cuts start happening. So if we go up aggressive, we got to go down aggressive. And we've seen that with crypto price. We talked about that. Hey, when something rallies up like this, it usually kind of pops back down just as fast. We'd rather stair step it. Now, the reason I'm doing this video is not just because of that data pivoting, which, by the way, as always, any article you see in this video, along with all my other ones, will be linked in the description below. You can use that for more economic indicators. And if you want even more economic indicators that are good, I will have that video linked at the end. A lot of good, juicy news. Good, juicy, educational news. Here's what's got me excited. Bitcoin making another run. Now, look, it's obvious. You can zoom in here and see clear as day. Look. 35,758 got rejected twice. You're not worried about that. Why? Because we're making a move again, all right? Once we broke past this 35,000 right here, and we talked about this, okay, with the XRP candlesticks. There's some big candlesticks that once they pass through some big numbers and they just keep plowing through those, that's when the move starts. The Bitcoin move, when I did the video yesterday saying how excited I was that Bitcoin was moving and the move with XRP and the rest of the market wasn't done, well, I guess I was right, wasn't it? Because look what happens when I go to the 15-minute mark of XRP. And that's exactly what happened. We had the big candlestick. We're making the move, running along with Bitcoin, and look what happens, everyone. We're trying yet again to breach through that 70-cent mark. XLM, same thing right here. And let's put this now to the 15-minute mark. And 15-minute mark, I'm telling you, is a really good indicator. See, Bitcoin makes the move. XLM starts making the move. So that's where this excitement is coming in. It's this right here. We're making yet another move, trying to make 36,000 happen with Bitcoin. And that's why the market's getting excited. The market's looking at the data like this going, yo, we don't have to go that much longer with crazy rate pressure. Once we think the rate pressure is over, then it's like, whoa, 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 we're going to get massive rate relief. We've also got Bitcoin ETF action that's helping propel a lot of this juicy goodness. Now, at the time of recording, I'm sitting here looking at Bitcoin at 35,754. XRP closer to 70 cents than we have been in a long time. This is good stuff. With good data like this starting to pop up more and more with bigger percentages telling us, guys, the pain train, we almost done with it. And then we're going to be in the happy train. Or I don't know. What do you call the opposite of the pain train? The nice train? The soft train? I don't know. I just said the happy train. Now, it's late afternoon on Wednesday as I'm recording this, and I'm looking at the economic calendar in front of me, and I'm thinking, you know what? We seem pretty clear through this weekend. I don't see anything that's on this calendar right here that's like, dude, you got to worry about it, right? A lot of the reports and data coming out right now is kind of on the minor side. But what isn't minor is seeing what's happening with Fed fund rates. The market is really sitting there going, you know what? We are right here. We are like right at the top. And once we get to that top, just like the roller coaster, we are just gonna roll those rates right on down. And as those rates roll right on down, money becomes more affordable, which means the appetite for risky asset classes like crypto become more affordable as well. Growth asset classes as well can start growing. Why? Because the money needed to expand to grow becomes cheaper as well. Well, another auction is happening tonight, and I'm looking to score some more juicy goodiness, some more silver, gold, and jewelry and precious metals, maybe even a few Christmas gifts for the family. What are you doing? Let me know in the comments down below, and are you excited to see Fed fund rate stuff like this starting to show us that, hey, the worst is over and we might even have like a really juicy reversal? Let me know in the comments below. Earlier I said I had more juicy economic goodness. I do. That's this video right here. Check it out. You will not be disappointed, as I guarantee you will learn something. Yeah, that's what this channel is all about. Well, I gotta go do a lift and a run. I'll catch you cool cats later.